Welcome back, everyone, to my 3 stocks on sale series for the last month of the year, where in each episode, I use all of the current market volatility to find you guys 3 new stocks that I think are on sale at today's prices for the long term. And to make things even more fun and interesting, I specifically choose one low risk, one medium risk, and one high risk stock just to give you guys a little bit more variety and show you what's available out there in the market. This is, of course, just my opinion, and I do my best to find you guys some interesting stocks to look at. But if you appreciate my hard work, then please consider supporting the channel just by subscribing or hitting that like button. It helps keep the channel alive and it means a lot to me. But with that said, let's jump into this new list of stocks. All right, guys, and starting first here with our low risk option. Right now, I gotta say, guys, Amazon stock is looking really good. From the top, they're currently experiencing one of the largest crashes that I've ever seen, losing about half of its entire value. I know so many people that have always wanted to own Amazon stock, but they would argue that it's too high or it's too expensive. Well, how about the stock getting cut in half? Is that good enough? I mean, this is a company that back in 2019 was already doing more in sales than what other massive behemoths like Microsoft or even Google are doing today at almost $300 billion like 3 years ago. And if you fast forward to this year, they're already doing over $500 billion. That is so crazy for one single company. And it's really in large part due to the gigantic growth that they saw in 2020 and 2021 during the pandemic, growing by mind-blowing 37% and 22% respectively, despite that already massive size. And look, after 2 phenomenal years like that, you would think that they'd have to correct back down a little, but nope, they're literally growing at almost a double-digit percent again this year, and still another 11% expected next year too. But somehow that growth is just not good enough for investors that are now cutting the stock in half, and that's crazy to me. Amazon is such a clear buy for what you get. I mean, they already command the most online shopping market share at about 57% in the US. The next closest competitor, by the way, is Walmart at only 6%. I don't even know what to say about that. Like, it's sad, it's hilarious. I don't know, but it's nothing compared to Amazon. In fact, they've become so large at this point that they even command the most product searches online at over 50% of the market. That's even ahead of Google. So you're curious about some product that you heard of or you want to compare prices? Well, you don't even go straight to Google anymore. You open the Amazon app. But it doesn't stop there. They also have the largest cloud platform, which is arguably the most important market of the future because literally everything digital is going to run on the cloud eventually. So AI, the Internet of Things, smart cities, business, social media, gaming, practically everything is going to be on the cloud. And that's why they're still growing that segment by around 30% each quarter, despite already being the largest in the world. And all of this dominance across various platforms is also giving them even more digital real estate to advertise on, which is how they've slowly broken into the former duopoly of digital advertising that was controlled by Google and Facebook, now turning it into really a triopoly with Amazon included. Plus, on top of all that, Amazon is even expanding further into new markets like electric vehicles, which it now has over 1,000 EVs making deliveries thanks to their investment in Rivian. And you can't forget about video, where they technically have over 200 million users on Prime Video now, which is right up there with Netflix and Disney. That's pretty incredible. And just last month, they even announced that they'll be spending over $1 billion a year to produce up to 15 different movies that will release in physical movie theaters thanks to the huge acquisition that they made in the Hollywood studio company MGM, who is of course famous for giant franchises like Rocky and James Bond, which you just know that they're going to use to also beef up their Prime Video lineup too. It's very similar to what Disney does. They make these huge blockbuster movies, especially from Marvel, Star Wars, and other Disney, Pixar, other kinds of stuff like that too. And they release them in theaters. They make a lot of money that way. But then after a short while, they also bring them onto the streaming platform and they can make money that way too and attract a bunch of viewers and customers to come onto the platform to watch those big hit movies. So there's a lot of huge synergies there, and I think it's a huge deal for Amazon. Dude, you just can't sleep on Amazon. They go into these markets out of nowhere. They come out of nowhere and just jump into these markets and take over them. I'm not saying that it'll exactly happen that way with video, but I think it's going to be a big deal for them. And Amazon, just in general, is such a beast of a company and a stock. To be able to buy it at half the price, I think it's an absolute steal. And I'm very happy. I feel fortunate to be able to own this stock myself. All right, guys, moving on here to stock number two. This is going to be our medium risk option. And for these, I usually like to go with a dividend stock since the dividend can help mitigate some of that risk. But this time, I'm going with a financial stock in US Bancorp, ticker symbol USB, who is, of course, famous for owning US Bank, which commands about the fifth most market share in America by assets at around 3%. That may not seem like a lot, but it's still more than $500 billion, so definitely not a small bank by any means. And actually, that disadvantage of being not quite as large as some of their bigger competitors can also be looked at as their biggest advantage because it gives them plenty of room to expand and grow while the others remain more stagnant. And that's exactly what we see with almost double digit growth from US Bank, while the others are mid single digit or even negative. And really, this is actually a much weaker year for them because next year their sales are expected to skyrocket by almost 20%, thanks in large part to their acquisition of Union Bank. But no matter how you slice it, for a big bank to be growing at these type of rates is really impressive. And I just feel that they really do a great job of running their business overall and just kind of all around. One of my favorite things about US Bank is how heavily they've invested into online banking so that they are less reliant on actual branch stores that can hurt their margins, even partnering with internet and cloud computing giants like Adobe and Microsoft to improve their services for customers and therefore accelerate adoption. The result is that they've already reached over 80% of their customers primarily using digital banking, with over 60% of their loans being done online or through their mobile app last quarter. That's up massively from the roughly 40% that they were doing just a couple years ago. And it's clearly paying off as it's raised their profitability while also lowering their valuation. Now, part of the cheap valuation is obviously thanks to the stock crashing, right along with pretty much every other bank stock in the market due to all the recession fears that we've been having lately, and of course the weak macroeconomy having now fallen by about 30% from the top when looking at US bank stock. But like I said, at the same time, their profits have been improving, and the result is that they are now trading at not only way cheaper than their own 5-year average, but just as important, they're actually lower than the broader sector too. That's pretty crazy considering that this is the highest growth of the 5 big banks in America. Because if anything, they should be trading like a growth stock and be one of the most expensive within that sector. But instead, they're actually cheaper. Plus, the dividend has also soared to a super attractive yield, especially for how high growth it is. I mean, you're talking about a sustainable payout ratio below 50%, a double-digit growth rate, and over a decade of consecutive increases, despite it already yielding over 4%. That's crazy, guys. The only other big bank that is really close is Citigroup, is just slightly higher, but they're about the same. But all the others are well below USB on that yield. So you're talking more growth, a better dividend, and yet the stock is actually cheaper. In my opinion, that just cannot last. And I've seen this happen many times with other stocks. I can't say for sure that it will happen with USB, but I've seen this happen where the valuation is just too low, the dividend is just too high, and the only way for the market to correct that is for the stock price to go up. So I think USB presents a pretty good opportunity here in terms of risk reward, and you get some great value from the dividend, but also from the stock price going up over the long term. So I think USB is a solid choice. I happen to already own Chase stock, which is the only bank that I own. And that's always been enough for me because I don't like being overly exposed to bank stocks. And Chase, I've always felt, is really the best run bank out there. But man, sometimes I look at these numbers and I'm like, am I invested in the right bank? Because USB is looking super good right now. And I would just say this. Even if I already own Chase or someone already owns a different bank stock, I think USB is a great alternative. If you're looking for something different, if I didn't already own Chase but I wanted another bank stock, this would be my number 2 choice here. USB, I think it's a fantastic alternative to something like Chase, or maybe in other scenarios too, an alternative to something else. But anyway, I don't own it yet myself because I already own Chase. That's enough for me, but I think it's a very solid pick long term. All right, guys, that's going to leave us now with the third and final stock, which is also our high risk option. And this time, I'm sorry, guys, but we're flying back out to China for this one because I'm going with the electric vehicle company NIO, ticker symbol NIO. And as you guys know, NIO is a stock that I did used to own myself in the past as a speculative stock before eventually selling out of it and just focusing solely on Tesla as my only pure EV play for the future. But after seeing it crash by so much, currently down a massive over 80% from the top, I'm starting to think that this might be a buy once again, because the crash has now left the valuation at a PS ratio of only 3. That's down from more than 4 times that amount just about a year ago. Plus, their sales are growing at such a large rate that it's likely to get even cheaper over time. In fact, even with how disastrously bad the Chinese economy has been lately because of the pandemic lockdowns that are crippling their economy, and on top of that doing a lot of humanitarian, bad things and stuff, but despite all of that, NIO has still been able to put up unbelievable growth rates, even surpassing a triple digit percentage in both 2020 and 2021. And sure, growth may be slowing down here the year after, but damn, they're still putting up over 40% this year after doing over 100% in each of the previous two. And they're expected to rise up again to over 80% growth in 2023. That's incredible given the circumstance. And at that rate, their PS ratio would probably fall to just around 1, which is really cheap for an EV company that can soar in profits once they really ramp up. I mean, sure, they may not be at the level of Tesla yet, who sports industry leading gross margins of over 25%. But damn, NIO is already beating Ford, and they've been around forever, while NIO just barely started selling vehicles less than a decade ago. And looking forward into the future, NIO is all systems go. First of all, they've already entered the massive European market with multiple different models, and they're hoping to convince Europeans to give their Chinese vehicles a try by offering their innovative battery swap subscription services, which I think will convince people. With already 20 swap stations being built by the end of this year, and at least 1,000 expected by 2025. And in the meantime, they already have a charging network of close to 400,000 locations across the continent, thanks in large part to their partnership with energy giant Shell, who is not only helping them build more battery stations, but is even giving them access to their chargers as well. But NIO's expansion won't stop there. Of course, we know that after China and Europe, the United States is the third largest EV market in the world, and it just so happens that NIO's CEO recently said in an interview that their next generation of vehicles will in fact launch in America. Now, it's unclear if he's talking about the models releasing, as early as next year, or the cheaper sub-brand for the mass market that may take a little longer, but either way, the point is that NIO vehicles will be available in the States within just a couple years, and that's very exciting. Apart from that, the CEO also noted that they will be making their own batteries and chips by 2024, which will help them reach profitability that same year. That's your biggest cost. You're an EV maker, batteries and chips. You can make your own. That helps your margins a huge amount. And they also plan to even launch their very own smartphone by next year as well, in 2023, which will have added functionality and integrations with their vehicles, which is pretty crazy. Look, you add all of this up, the aggressive expansions, the innovation, the strong performance, and the huge haircut to the stock price and the valuation, and I think as a speculative stock, NIO is just as attractive as practically any other spec stock out there in the market. The issue with NIO, it's always going to be the issue, is that they're a Chinese stock. So there's investors out there that will just flat out not touch a stock if it's Chinese, because that inherently has other risks associated to it. And I completely understand that Chinese stocks are very risky, and that's not anything against Chinese stocks or the country or anything like that. It's just that they have their own particular set of risks that you have to be aware of. But NIO, I think, is just about as good as any other spec stock out there if you can kind of get past that hurdle of the Chinese specific risks that are associated to it. But man, I mean, I really like it. The only reason why I don't own NIO stock myself right now is because I do already own Tesla. That gives me a lot of exposure as a pure play EV stock, and it's such a big position of mine. And on top of that, I just own way too many spec stocks as it is. But if that was not the case, if I was looking for a spec stock, NIO would be right up there on the list. And I think that the price and the valuation is looking very good. I hear so many times people tell me, look at this spec stock, look at this spec stock, but their valuations are sky high. NIO is actually pretty darn attractive, and they got a lot of potential. Man, if I start seeing NIOs out on the road in America, that would be crazy. We'll see if it happens, but shoot, I might even consider a NIO. I'll probably still go with a Tesla because I like the Cybertruck, but man, if NIOs are out on the road in America and they're at a much cheaper price, if they can get a cheaper price with that sub brand, I mean, you're talking about a very compelling alternative there. But anyway, those are just my thoughts. What do you guys think about the stocks that we talked about in today's video? I'd love to hear your thoughts down below in the comment section. And I hope that you enjoyed the video. I hope you're all doing well. I hope you're enjoying the World Cup of soccer. Let me know if you're from any particular country or who you're rooting for. I'd love to hear your thoughts. I'm personally Argentinian, but I also really like America. I also really like Mexico. Unfortunately, Mexico is already out of the World Cup, but there's other countries that I love too, and I love all countries. So I'd love to hear your thoughts down below. Let me know if you're rooting for any team, and I will catch you in the next video. Thanks again, everyone. I appreciate all your support. It means a lot to me. I'll see you next time. Take care. Bye-bye.